You ever feel like you're getting whiplash from the economic news? I mean, one day everything is booming, the next it's all doom and gloom. It can be super confusing, right? So today we're going to cut right through that chaos. We're going to figure out what's a real, genuine signal for the economy and what's just distracting noise.
And this right here is the perfect example of that whiplash. On one side, you have a major political figure saying the stock market could double. On the other side, you've got top analysts at Goldman Sachs predicting a massive surge in gold, which, is where people run when they're scared. One sounds like everything's awesome. The other sounds like we should all be running for cover. So, what is really going on?
All right, so let's tackle that first claim, this whole idea of the market doubling. To really get this, we need to talk about a really important concept: market noise. I mean, this quote from market strategist Kenny Polcari just hits the nail on the head. See, when a politician throws out some huge, headline-grabbing number like that, the pros, the people who actually do this for a living, they pretty much just call it what it is: noise. It's great for a soundbite, but it's not based on the hard data that actually moves the economy. So let's break that down. What is noise? Well, it's all the talk, all the speculation, the political shouting matches that make you feel like you have to do something right now. But it's really just a distraction from the fundamentals. The real kind of boring but super important stuff like company earnings reports, what the Federal Reserve is up to with interest rates, and all that actual economic data. Okay, so if that big market prediction is the noise, then what's the signal? Let's flip over to that Goldman Sachs forecast on gold, because this tells a completely different story. I mean, look at this. It's not some vague, oh, it'll go up a lot. No, they're putting a hard number on it, $5,400. Goldman is calling for a 17% jump in the price of gold. Now, when a massive firm like that puts out a specific target, you can bet there's some serious analysis behind it.
And here's the why behind it. This isn't just some gut feeling. They're looking at actual, clear trends happening around the world. First off, there's a ton of geopolitical uncertainty, and that makes investors nervous, so they buy gold for safety. Second, central banks all over the globe are buying it up like crazy. And third, they think the Federal Reserve is going to start easing up and maybe lowering interest rates. Now, these are what you call signals, real, tangible things you can actually point to. All right, we've heard from the politicians and the big banks, but you know what? Maybe the most powerful signal of all is what you and I are actually doing with our money. Let's look at the tale of the consumer. Now, this is fascinating. It's from the CFO of Procter & Gamble, the folks who make Tide, Pampers, basically everything under your sink. He says the consumer is being more diligent. And, that's just some fancy corporate speak for people are watching every single penny. They're being a lot more careful. And here's the proof in the pudding, right here in the numbers. Normally, P&G expects to see their sales grow by, say, 3 to 4%. But right now, they're barely hitting 1 to 2%. That's a huge slowdown. And it's a direct signal that people are tightening their belts, which doesn't exactly line up with that story of a super hot doubling economy. So what does that actually look like in our daily lives? Well, it means people are literally dosing their laundry detergent, using just a little bit less to make the bottle last longer. It means we're using up every last drop of ketchup in the pantry before we even think about buying a new one. These tiny little decisions, when millions of us do them, send a massive signal through the economy. And this is all happening while we're dealing with something I know you've noticed at the grocery store: shrinkflation. Yeah, that sneaky feeling when your bag of chips seems to be half air, but the price sure didn't go down. It's how companies are trying to cope with their own costs, and it's yet another signal of the pressure in the system. I love this quote from Kenny Polcari. It just sums it up perfectly. He's talking about Spice Stars, right? He says the holes are bigger and the container is smaller. Think about that. They make the holes bigger so you pour out more, but they give you less in the bottle to begin with. It's the perfect little snapshot of the economic pressure everyone's feeling, from the big corporations all the way down to us. Okay, so hold on a second. We have a clear signal from us, the consumers, that we're being super careful, but the stock market is still pretty strong. Those two things don't seem to match up, right? So what are we missing? What's the real signal that's propping up the market? Well, the answer, pretty much across the board, is one thing: AI. And here's the key part. Analysts don't think this is just another bubble like we've seen in the past. This feels different. It feels like a real, fundamental shift in the economy. You've got CEOs announcing just billions and billions in spending, and the tech giants, Microsoft, Amazon, Apple, Google, are leading the charge. This is a classic tale of two economies. You've got this massive boom in one specific area, AI, that's strong enough to lift the whole market, even while the rest of us are trying to make our Tide Pods last an extra week. Okay, that was a lot.
We've talked about political noise, Wall Street signals, how we're all shopping. So let's boil this all down into what you really need to know. So how do you do it? How do you separate the real signals from all that noise? Well, here's a simple game plan. First, just ignore the crazy political predictions. They're almost always noise designed to get a reaction. Second, focus on the fundamentals. Yeah, it's the boring stuff, company earnings, what the Fed is doing, but it's what actually matters. Third, and this is a big one, watch the consumer. How we all spend our money is maybe the most honest signal out there. And finally, keep an eye on the huge, game-changing trends like AI that can drive the whole economy in a new direction.
And that really brings it all home, doesn't it? Because this isn't just some abstract economic theory. It's about how you make decisions in your own life. So the next time you're looking at your own finances or just reading the news, ask yourself, what's a real signal telling me to pay attention? And what's just noise trying to distract me?